exchange rates. So the idea here is not going into the calculations and simulations and all those stuff. At this time, at this level, it is not required. What we have to do, we have to find out, the concepts, the overall concepts, the definitions, and how we can interpret what's going on. That's it. So we will be following the chapter's outline here. So let's start. So this is the third part of your book, which is exchange rate risk management. We have successfully done two parts, in which first we understand that, and then we finding out the exchange rate movements, and now we are having into risk management. Okay, and in risk management, the first one is forecasting. So question is, how this forecasting gonna impact? Why you are studying this forecasting? The question is right. So we have already did the fundamentals, the IRP, the PPP, we already know that, but why we are using forecasting, right? This sounds like very confusing. We already found that what will be the exchange rate, it will decrease or increase or whatsoever through IFP, through IRP, through the PPP. Then still, do we need to forecast the exchange rate, and for why, right? Why and for what? So the answer is, how the exchange rate forecasting is done. First of all, you gather the information on existing and anticipated economic conditions, right, of the various countries which you are involving. If your trade is with Korea, Japan, China, then you see their economic conditions, because if you are in US and you are doing trade with Korea, Japan, and China, so you need to look their expectations or anticipation of their economic conditions. And you also need to see their historical movement as well. You find the forecast, and then why this forecast is needed and how you're going to use that forecast. So you gather the information and the anticipated cash flows in each currency at each subsidiary, because you are running MNC, multinational corporation, who is doing business in Korea, in Japan, and in China, right? So how much Korean company, a Korean subsidiary, is going to remit you the profit? How much Japanese subsidiary gonna send back the profit, and how gonna Chinese subsidiary gonna be sending you the profit? You can take the example of the Apple Corporation, right? In China they have factory, I think in Vietnam, right? I think also in Korea as well. So all of their subsidiaries, ultimately at the end of the year, they will be sending back their profit to the parent company, which is the Apple Corporation California, right? So, and then you anticipate the amount of cash that is going to be remitted to the parent company, and then how are you gonna protect that cash? Then you need to take positions. Either you want to go to the options, forward, or futures to hedge your risk, right? So that is why forecasting is needed, and you cannot walk away from this forecasting. So how exposure will affect cash flows based on forecasted exchange rates? Because you plan, right? Why you do all this stuff? To plan, right? And how this planning going to help? So the shrewd manager or the wise managers, they always plan in advance, right? For example, the company need a big plant replacement in 5 years, so they need to take out some cash, so that they need to take minimum loan from the bank, because loan is costly. And how costly? Because you have to pay interest, right? So if anything bad happen, if something bad happen and you are deviating from your plan, then you are a bad manager. You need to accommodate that kind of contingency plan into your planning as well. Otherwise, your planning going to be ruined, and chances are that your reputation going to be a bad manager. Second one, whether to hedge your position or to go with this exposure, because hedging your position also costly. You need to pay some agency fees as well, and that also depends on the size. If you want to take position of $10,000, the costing fees is maybe just for 100 or 200. But if you want to hedge the position of $100 million, then you have to pay, for example, $50,000 as commission or as fees or whatsoever. It's a huge amount, right? And if your forecasting says that you are receiving money and chances are that the foreign currency gonna increase, then it would be stupid idea to go into risk, locking your risk, because you need to pay them this fees as well. So it's better to expose yourself in front of a risk. And risk is that it is in your favor. Why? Because your analysis shows that the foreign currency is going to be increasing. So you would be receiving much more than expected, right? Because currency appreciate. So all of these things, forecasting is necessary. Yes, because at the start of the year, you have to produce some budgets. The biggest budget, the master budget is the cash budget, in which you talk about your payments, your receipts, and on the basis of your differences between the surplus and deficit, whether you need to borrow the money or whether you need ample money to invest. That depends on, if you have multinational corporation, that depends on forecasting as well. Let's move forward. So the introduction of this chapter is that the cost of an MNC's operation and the revenue received from operations are affected by exchange rate movements. I gave you the introduction as well. So I'm just going to be reading this. So an MNC's forecast of exchange rate movements can affect the feasibility of its planned projects and might influence its managerial decisions. An MNC's revision of exchange rate forecast can exchange the relative benefits of alternative proposed operations and may cause MNCs to revise its business strategies. So why firms forecast? Number one, hedging decisions. Whether a firm hedge be determined by its forecast of foreign currency value. I hope you understand what is hedge. Hedge to minimize your risk or to lock your risk. That's it. It doesn't mean that the risk is going to be zero. It's not the arbitrage. There is risk, but you fix the risk. That's it. Whether the rate increase or decrease, but you lock down on a certain amount. Whether the dollar increase or decrease, I will be giving you this much amount at that much rate. That's it. We call this hedging. Second, short-term investments decisions. How? That the corporations sometimes has a substantial amount of excess cash available for short-term period. Large deposits can establish in several currencies as well. So if you have the money, you definitely want to invest where? What was the tagline for investment? Invest where the foreign exchange rate gonna rise, so that when you convert back into your home currency, you will receive double return. Understand? Third, capital budgeting decision. Capital budgeting decision means when you want to buy or when you want to start the project that costs billions of dollars. So when an MNC parent assesses whether to invest funds in foreign projects, you're expending money or you are acquiring some company, purchasing some company, it is called capital budgeting. Or you want to buy or replace a plant, buy a plant. So the firm takes into account that the project may periodically require exchange of currencies. So it's not like that if America is investing in Bangladesh textiles, American textile companies investing in Bangladesh textiles sector. It's not that they announce $10 billion and they invest in one day. No, the money is coming in 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 periodic basis. After 1 month, like $1 million gonna come for site analysis or for the project analysis, and then 500 million is coming, then 1 billion is coming. So all of these projections, the anticipation of inflows they need forecasting exchange rate so that everything is going smooth according to the plan. Fourth, earnings assessments. I gave you the example that the parent decisions about whether the foreign subsidiary should reinvest earnings in foreign country or remit its earnings back to its parent may be influenced by exchange rate. If exchange rates are not feasible, it's better to keep those earnings into that countries where subsidiaries are established, keep their currency over there. For example, if yuan and dollar exchange rate is not good, then Apple Corporation may say that, look, you don't need to send back profits to the US parent company, just keep those earnings to the Chinese banks. So when the exchange rates are unfavorable, then just remit all those earnings to us. The long-term financing decisions, MNCs that issue bonds to secure long-term funds may consider denominating in the bonds in the foreign currencies. For example, for the Chinese subsidiary of Apple Corporation, they need money